Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I want to speak about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment the market is rejecting a quite strong level of previous monthly resistance turned support, which has already been tested. In fact, what we can see is that exactly from here, all this previous move to the downside was created. After that, the market broke above the zone, retested it here with the creation of this wick, and currently it is rejecting to the upside this very strong level of previous monthly resistance turned support. In a situation like this, we could expect more bullish continuation to be created away from this level. Now, dropping down on the weekly time frame, what we can see is that from a weekly standpoint, we have a market which has created a quite strong impulse to the upside, breaking structure here, which we had at this level. In fact, exactly from this zone, we had all this previous rejection to the downside. The market then broke above the level. And as we know, previous resistance, once it is broken to the upside, becomes support. So that is why we had this perfect test here and reject to the upside. Now, we can also notice that from a patterns perspective, we had a very clear impulse to the upside, followed by this correction. Now, we can measure this correction by taking our Fibonacci from the low to the high of this impulse leg, and we can see how the 0.382 Fibonacci retracement was tested perfectly, and that is exactly the level that the market rejected to the upside. So that means that actually we had confluence of support at this level, which we did in fact expect this market to test and then to reject to the upside, which is in fact exactly what the market just did. So in a situation like this, more bullish price action could be expected away from this zone. Now, dropping down on the daily time frame, what do we see? Well, from a daily standpoint, I did speak about gold quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection to the upside. Again, after this impulse and correction, I explained all the reasons for which we could expect the creation of a higher high. And again, that is what the market gave us. Then we had the creation of this M pattern. From here, I made a full breakdown explaining all the reasons for which we could expect first this impulse, then correction, and then the continuation to the upside. And again, that is exactly what the market gave us. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. Now, if we go and see what we have before we continue with our technical analysis here from a daily perspective, if we go and see what we have when it comes to the commitment of traders, so how institutions are moving their positioning, what we can see is that with the last reports, we went from 71.4k net positions up to 171.7k net positions. In fact, we can notice how with the last report alone, institutions have added 15,349 longs and closed 980 shorts. So they have been increasing their longs and decreasing their shorts, especially a massive amount of longs added with the last report, bringing the longs from 220k to 269k and decreasing the shorts from 148k to 97.9k. So clearly institutions are moving to the bullish side of this market. Now, this increases the probabilities that, especially if the market from here will provide a correction, we could get more bullish continuation, because if we get a correction institutions are already adding longs. So after a correction, they would be adding even more longs from a better price, and that would increase the probabilities of a potential rejection to the upside away from this level. Because from a daily perspective, we can notice how we now have a clear impulse to the upside and the start of a correction. And if we look at the structure, we can see how at this level we have previous daily resistance, which is now turned support. And we can also notice how we have a clear impulse, and as the market is correcting, we can measure that correction by taking our Fibonacci from the low to the high of the impulse leg. And this shows us how we have the 50%, 0.618 Fibonacci retracements and 0.382 around this area, which creates confluence of support with this previous high, which is now previous resistance turned support. And inside of a confluence of support, you have increased probabilities of getting institutional longing, which at that point in turn would further increase the probabilities of a potential rejection to the upside away from the level. So if we will have this correction, how we could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, potentially, what I could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market, as I would have, to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to me one of my valid entries, at that point, I could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which is linked both in description and in my bio. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns and the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that you have the possibility to join in order to gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.